Bitcoin dominance is finally breaking down after this entire cycle. Every influencer you know on YouTube and TikTok has been telling you this is the sign. This is when it's finally going to happen. Here comes alt season the whole time. Every time we broke below just like that, or anytime we break trend like that, they'd be crying, here we go, this is alt season. And what happened? We never had alt season. Well, here we are, clearly, definitely breaking major trend with a major rejection right there with that wick. And that shows a sign of major rejection and a breakdown in Bitcoin dominance finally and truthfully after this whole cycle. So that means the altcoin should be flying, right? I mean, Solana should be absolutely launching right now, right? Let's take a look. Is it? Oh, well, whoa, hold on. You mean to tell me Bitcoin dominance is breaking down and this cycle's top alt, Solana, is also breaking down? That's weird. Okay, so where's the money going? If Bitcoin dominance is going down, that means the market cap of Bitcoin is dropping, but that also means that the money has to stay in the overall crypto market. So where's it going? Oh, let's see. Is it just spreading through alts and there's too many but all others dominant should be climbing? Let's see. Oh, well, I mean, you did see a little pop up there on the weekly, but it's not climbing in regards to as much as Bitcoin dominance is falling. Hold on. Do you mean to tell me it's not going to altcoins? It's leaving Bitcoin. Where's it going? Hold on. Let's look at USDT.D. Oh my. Tether is going up while Bitcoin dominance is falling. This means that all the money that's being taken out of Bitcoin is being put into stablecoins. Oh no, that means we're not having an alt season after all when Bitcoin dominance falls. Oh no, that means all our favorite influencers are idiots and they don't know what they're talking about. But are we reaching some kind of top? I don't know. I mean, it looks to me like it's a head and shoulder pattern, right? Boom. What about the measured move? Where does it stop? Where does the measured move stop? Let's find out. Way up there. There's your measured move on the head and shoulder breakout. That's a long ways away, guys. I mean, be honest with you, it definitely looks like the bear market is here. You're just seeing more and more metrics point to that. Of course, I've been saying that the top was in for quite a while now, but this is just the evidence to back it up. And there's another chart we can look at other than USDT dominance, which most people look at, but everybody forgets there's a new kid on the blocks, and that's USDC. Okay, let's take a look at that. Oh yeah, wow. Now, so we appear to be breaking out of a cup and handle pattern here. Measured move is the base of the cup. So, looks like we got quite a ways to go before money stops pouring out of Bitcoin and altcoins. Yeah, you're probably going to come into this 0.5 fib and this weekly order block here. Right between the 0.5 fib and the golden pocket. That is your measured move on USDC dominance. And there's a massive inefficiency right here that needs to get filled. So probably very, very low volume from there to there. Let's take a look at it from the whole move down. Yeah, definitely a high volume node right here. So yeah, I mean, it looks like this bleed out is going to continue for some time. Even if we get some sort of retracement on Bitcoin here in the next couple of weeks, which I'm sure we will. But nothing to get excited about, because I think at this point we all can agree that we are in a bear market, and we're going to be looking for lower lows, lower highs to continue coming in. So, in addition to that, if we go and look at Bitcoin versus gold, I put this chart on X a while back before anybody else was talking about it, before the pattern had even broken down. If you look at Bitcoin versus gold, even back when I posted the chart, you could clearly see that we were printing a head and shoulder pattern on Bitcoin versus gold, and that this would indicate that gold would begin outperforming Bitcoin drastically. And the target for that head and shoulder pattern is down in between, really and truly, right around the 886 level here. So definitely more downside to come. And then we can look at the S&P 500, and we can see that we have broken market structure on the weekly time frame here. We did do a SFP pattern, so we didn't close below, but we're definitely getting some major signs of weakness, breaking down this major trend line. And we did close a daily candle below that low. And so right now, officially we've changed market structure right there. And that is a major red flag. It's a red flag that produced itself during the 2021, end of 2021 bull market. And really and truly, we really need to see, this is a great way to find out when you need to get exposure to the market, because it all works together. We need to see the S&P at least tag this primary trend line here. We need to see that happen before we're even thinking about a bottom coming in. Just like back in April when you had the yen carry trade fears back in April of this year. You had this massive sell-off in the S&P, and it produced a nice bottom in Bitcoin and alts. And it happened on this primary trend line. So that move down was, let's see, take a quick measurement. That was a 20% move down. And so from the peak that we just put in back to the primary trend line is about 23%. So really not out of the question at all. The question is that going to be the bottom of a bear market like it was in 2022? Are we going to come down that fast? I don't think we should. I think we should, come down a little slower like we did during 2022's bear market. Chop around and come down nice and slow, let everything kind of reset. This was great for the middle of the bull run, and we could have another move like that, V-shaped recovery. But if we want a true bear market where we see a reset in all the stock prices and stuff, and all the institutions can get good entries, Warren Buffett will come off that pile of cash he's been sitting on for so long. I think we really need to need to see a market-wide reset. And so before I really want to allocate, I really want to see this general area tapped on the S&P 500. And but there is always the last scenario. And the last scenario is what they call the fourth turning. And it's just that overdue massive correction that we haven't seen since back in the 2000 dot-com bubble, where we've seen a 52% drop in the stock market. And then in the 08 financial crisis, the recession, we've seen that massive 61% drop. So we haven't had one of those in a long time. COVID's dip only gave us a 35% drawdown. So we haven't seen one of those 50+% drawdowns in 17 years. And so that is a possibility. I think the only thing that would prevent that from happening is the fact that they are just printing the heck out of the US dollar, and therefore it just continues to not necessarily prop asset and equity prices up, but and it's not that the equities are going up in value so much as the dollar is losing value. So I think that could keep that from happening. But if that was going to happen, then this major trend line here, which I guess you could call this trend line the secondary trend line according to Dow theory. That would be the secondary trend line, and then your lower one here would be your primary trend line, which we have not tapped since the COVID lows. So now that drawdown right there from the highs, if that ends up being the high, would be right at about, depending on how fast we fell, it'd be right at about that 52% that we saw in the .com bubble. And I think that would be extremely healthy. I think that kind of pullback in all the markets, taking out all this liquidity, taking out all that liquidity there, I think that would really freak everybody out to a point that, there would just be such utter capitulation globally in all markets. I think that is a scenario where right now my bear market low target for Bitcoin is 32K. I think that and that coincides with all your previous bear markets. You from your bear market low to from your bull market high to your bear market low, you always have seen that bottom coming in right around that 786 to 886 zone. And so that's very, very well in line with what my expectations are for the upcoming bear market. I definitely am not buying any Bitcoin until we see at least like 32K right around these supports, because that coincides with all this support here and the resistance that we never tested as support there yet, and that's also between the 786 and the 886 fib level. And of course we have all this liquidity here that will get taken. We know, or any trader knows, that liquidity is a target. But if the S&P, so long story short, this would be where I'm really looking to load the boat on Bitcoin. But I'm going to enter in with a level of caution, especially paying attention to the S&P, because what I've described as a foreturning event for the S&P would in fact make Bitcoin do the unthinkable. And the unthinkable for Bitcoin would be, last bear market, everyone was at that point was calling for a $10,000 to $12,000 Bitcoin that were targeting this area of support. And of course we front ran it. We never back tested that either. So if the S&P has that 52% drawdown, right, we can definitely expect Bitcoin to do way worse in the bear than it did the last bear. Okay, we could see Bitcoin come and take this low at the $15,000, $16,000 range and back test this area of support. Now, I'll tell you, can you imagine the smell? Can you imagine the smell? Because nobody, and I mean nobody, is expecting that. Nobody is expecting 32K. Okay, nobody's expecting 32K. And, like I said, in the event that happens, it would have to take the S&P 500 to have one of those type of bear markets. And we are in a bubble with AI. We know that if you look at market breadth throughout the S&P 500, the whole index is being carried by just a handful of stocks, mainly in the AI space. So we are in a bubble similar to the bubble that we had in the .com bubble era here. And, every company's coming out, AI this, AI that. And, that's what happened back here during the 2020 .com bubble, is that everything was coming out. Hey, this such and such .com, books.com, food.com, trips.com, hotels.com. It was everything was .com. It was a new wave of innovation, and there was just so much um, just euphoria, and everybody's buying into everything that would come out that had anything to do with a .com, even though there was no product, there was no use case. And so it's a lot like what's going on with not only AI but also crypto. All these altcoins have come out. It's an altcoin for everything, and it's just, I mean, it's really like we're in a double bubble. So I do definitely see, the S&P working its way down to the secondary trend line, but I do reserve the possibility to monitor any kind of strength, and just global conditions. If there's any type of talk of World War III in that area, or anything going on globally, then that could cause the breakdown below that trend line to back test and then continuation down. That would be like the worst case scenario, but to be honest with you, we are long overdue for it. We really are. And the way that smart money, and that's been going on, 5 years since we tapped that, trend line back here. 5 years. And so institutions loaded the boat back here. There was plenty of accumulation going on, in all these regions and even back here. And so institutions have been in this market for quite some time, but it's time for a reset. It's time for them to be able to reload their bags. And, they are and have been taking profit and, manipulating the market so it does not quite dump yet. And eventually it will. Eventually the game will be up, and they will have did all that they wanted to do, offloaded all the shares they've accumulated over the last 5 to 7 years, and they will look to get back in as cheap as possible. Warren Buffett will be looking to get in as cheap as possible. And so really and truly, this whole line of liquidity right here is a prime target for the institutions, and really create that cascade effect where they can get really good entries on all the stocks that they really want to pick up. So to me, that makes the most sense, but we're a very, very, very long ways away from that right now. And right now we're just focused on where Bitcoin is headed right now. And obviously, as we just saw, it is definitely headed down. And it's not going to be coming up for new all-time highs anytime soon. Altcoins are all going to be absolutely obliterated, and only the cream will rise to the top. So what we're looking for right now is, if more than likely, the local area for Bitcoin to see some sort of short squeeze come in is right in this region where we're dancing around. That's going to depend on what happens in the stock market come Monday morning and throughout the early part of next week, whether or not we come in and see a short squeeze of all these shorts that have had easy ride, down this whole leg here. So we have that area of liquidity. And, that's going to be, coming up back up into this zone is you're going to be finding some major resistance levels. And I honestly would not expect it to come and break that high anytime soon, unless it's just SFP to further downside. So that's going to happen from either right here where we are in this general area, or it's going to happen after we take the lows, because when we take the lows here, everybody who uses market structure, smart money concepts, they're going to be shorting as soon as that break happens, much like they did the last bear market, and everybody's going to get squeezed. So that's what I'm looking for. But could we take this low and work our way back up and put a new all-time high to SFP? We could, and usually, that could happen. It could happen. But really and truly, I'm thinking lower lows and lower highs, to come throughout the remainder of the bear market. And I really think we're just getting started. So, hey, if we get a move up and you're still holding your bags, I'd definitely say get out while you can and just wait out the bear market, let a bottom come in. And that way you can really see those exponential gains. But trying to bid up here in these regions for a little small gain is really not even worth the risk. If you're buying Bitcoin here, I mean, yeah, sure, if we go put in a new high, you could see 60+%, but the odds are you're only going to get about a 30% move and maybe 40 before a lower low to come in. The better option is to come in to hold on to your money, first stop 32K, and in the next bull market, definitely going to see at least 150, but I'd expect more closer to about 200,000. So, if you wait and buy Bitcoin at 32K, then you could see like a 5X next cycle versus trying to come in here, time this little bottom for a 30% move or 60% move, and you could just end up holding from here down. And now, you don't have nothing to buy that low with for that 5X gain on Bitcoin. So to me, that's the better move, just to wait it out and be patient. But do what you do.